Hello, this is Dr. Sykes, and today I wanted to spend a little bit of time with you talking about the statements, the financial statements that we will be preparing throughout the whole semester. But I thought it would be a good time to talk about the articulation between the statements and how they are related. Now, the financial statements that we will be building today, you'll get a better understanding of where all the information comes from as we progress through the course. But to kind of give you a roadmap of where we're starting, I think it's best to start with the information just given to us, and then us taking that information and basically putting the puzzle together where they go in the financial statements. I don't know about you, but whenever I do a puzzle, I like to look at the box top as I'm putting the puzzle together. And that's kind of how I liken this to, is whenever you're looking at the final product of what you're building, it seems to go better during the process. So what I have for you here before we get started is just a fictitious financial information for a computer services company from from year 2 to year 3. And as you can see here, we have assets, liabilities, stockholders' equity, and then the related accounts underneath those subheadings. Now, again, the information of how that cash balance of $18,800, where that came from, that's what we're going to spend the rest of the semester looking through. But I thought that it would be best to show you how they're interrelated, especially from year to year. So what we know about the balance sheet accounts is that they are permanent accounts and that they never close, as opposed to temporary accounts, such as the accounts listed on the income statement. I assume that you have read the textbook and that you understand what an asset is, a liability, stockholders' equity, revenue, and expense, what those accounts are. Okay, so that is my assumption as I started this video. So as you can see, from year 2 to year 3, those balances have changed. But how and why did they change? So to give you a little bit better of understanding of the differences between year 2 and year 3, we start off with the balance sheet that we just had up at the very beginning. And then we also now have the balance sheet from year 3 like we had, but we have this right here in the middle. We have this computer services company statement of changes in stockholders' equity. Now, this is interesting because as you can see from the common stock here, we can see common stock and the common stock balance of $13,500. It actually starts as our beginning balance of common stock, $13,500. So we can see beginning common stock balance, $13,500. And then we have an ending stockholders' equity balance of $17,500, that's the total. I guess there's an ending retained earnings. So they roll over from year 2 to year 3. So we have common stock, beginning common stock, plus any common stock issued is ending common stock, and that rolls over here to year 3. We have a beginning retained earnings, and as you can see, the beginning retained earnings is the retained earnings from year 2. So this beginning retained earnings, $2,300, flows over here to this beginning retained earnings. We have changes to this retained earnings: net income, which we will calculate, dividends, which are at this point we're going to call them cash returns to owners, and then ending retained earnings, which is this $1,500. So that's a beginning retained earnings plus net income, or subtract if there's a net loss, and then less dividends of $300. Equal your ending retained earnings. Well, as you notice over here, that ending retained earnings number rolls over to year 3. So that's how those are articulated together between years 2 and 3, is this roll forward of retained earnings, where we start with the beginning retained earnings and then end up with ending retained earnings. But that's not all. There's still some more information that needs to be discussed. I had talked to you about how we add net income and how we subtract loss. Well, how do we get there? Well, net income needs to be calculated first. And so we have net income, and it's basically revenues less expenses. Now, it does get a little bit more difficult than that, but just take it for what it is right now. What you earn less what you spend equals your net income. That net income is added to the beginning retained earnings from the first year of your balance sheets reported. Then we subtract out those cash payments. At this time, we'll call them cash payments. They can be other types of dividends, but right now we're just going to call them cash payments of dividends. And then that equals the ending retained earnings, which again, like we just talked about in the prior screen, shows up here under the stockholders' equity. Now, we have to prepare the income statement first in order for us to prepare the statement of stockholders' equity. We have to prepare the statement of stockholders' equity Second, in order to prepare this balance sheet from the prior year. Now, take into consideration that this year 2 balance sheet would have already been prepared before year 3's income statement would have been calculated. And then yet again, we'll add in one more statement, and it's called the statement of cash flows. How did this cash balance of $18,800, how did we get all the way down to $500? That's quite a bit of change. Well, the statement of cash flows will help explain that. There are different types of cash flow activities. There's operating activities, investing activities, and financing activities. And all of those are discussed in your textbook. And for the purposes of saving time, I'm not going to go through each one of those. But if you add cash flow from operating, from investing, and financing, it'll help you come up with a net change in cash. If you add that change in cash to your beginning balance from year 2, you will then discuss you will then show basically what happened to your ending cash balance at the end of year 3. Okay, that's all for this short lesson. Let me know if you have any questions. I just wanted to take some time and talk about where we're going during the semester, and I hope this cleared a few of your questions up.